Hey, Brew Crew, Brewer here. Welcome back to another quick update. So yesterday we didn't do much at all except just watch how sideways the market was going. And the reason I didn't put on any positions over the past couple of days was simply that we had FOMC today, which I thought wouldn't really screw with our positions, but just to be safe, to wait for that to clear. And also we have major earnings coming up tomorrow after the market close with Facebook, Apple, Amazon, and Google, which I think is still what I think the market is waiting to see. So watch out for that. Today we put on a new position in GLD gold. We bought the 195 calls and sold 2 times the 200 calls. This is a call ratio spread. That spread alone costed about 6 cents, so we sold the 175 put against it to knock the debit down so that we actually take in an 8-cent credit on this entire play. That was our first spread, and then we entered another one of them for 6-cent credit. So total, we have a 14-cent credit, and our average credit per spread comes out to about 7-cent credit. This spread expires this Friday. Now, the reason I decided to put on this spread was to find a play for an upside move in GLD with the remaining couple of days that we have this week. I was kind of surprised that there was still quite a lot of premium left in the 200 calls at the time we entered, and we were able to get a decently wide 5-point wide spread, which should be decent enough to capture a profit on the last 2 days for gold in case, it does spike up. It does need to run up to near 195 though by Friday for the spread to expand, and that is pretty high from where we are, about 10 points higher. So we'll see how that turns out. Honestly, it could go down just as hard, so we do need to watch our downside here at 175, which is where we have our short put. But looking at the daily chart of gold, we do have some distance before we need to be on the lookout. I'm watching for how gold is going to react at the 181 level. I think that area should offer a bit of support for a bounce, followed by what happens after the gap fill right below. If that happens, remember we have 2 days left. Now, taking a quick look at our other positions, starting with DKNG, it looks like today we made another look below the 20 MA and bounced back up. This happened early on in the session, and it kind of looks like they just bought it back up. And I'm kind of liking this on the upside, honestly. Our play probably isn't going to hit this week, but even if it doesn't, I'm going to probably look to put on the same spread for next week. And we could probably open that position on Friday, since I think there will be slightly more premium for those short out of the money calls of the ratio spread. So I think that'll be in the works. Nvidia sitting right here at the trend line resistance. A magical rally up to 430 in the next 2 days would be great. Maybe to 425 tomorrow, and then 430 to 435 on Friday. Of course, that's wishful thinking, but that would be the ideal case. And I kind of do want it to play out that way. Obviously, we'd make money if that happens, but also I think that it would make for a great case study where I kind of show the dynamics on how the broken wing butterfly works, especially towards expiry. Actually, I'll just make a video about this play anyway. I think it's good to walk through when and why we employ this specific option strategy and how the spread behaves when the underlying moves in certain ways. I think that would be educational. So yeah, actually look out for that. Tesla. It's just so far from where the butterfly is positioned, but that's actually a good thing. This just means if Tesla does have a big rally towards the end of the week, the 1770s should see a drastic expansion in value before the 1800s get in the way. If Tesla never makes it high enough to expand the 1770s, then that's fine. We walk away with the credit we received, right? And SLV, this thing is probably not coming back down here by Friday, but all good. We collected a credit for this trade, so we'll just walk away with tiny profits. That pretty much covers it for today's update. Going through the rest of the week, key levels to watch out for. Let me switch over to the profile. I'm looking at ES3264 as the next upside target. That's the Virgin point of control from July 23rd. And on the downside, we have today's point of control down here at around 3238. Just note that these point of controls are like price magnets. No major scenarios in terms of levels to trade around though, unless we start looking back up above the 3272 level, which was last week's highs. And if so, that opens the door for the gap fill continuation all the way up to 3328. Okay, but in the meantime, market just kind of looks like it's doing a slow grind up as usual since we have value area overlapping to up. If it was a stronger trend up, value area would gap up, but we don't have that here. And remember, tomorrow is a huge earnings day, so I'm just waiting for that to be over before adding on any other positions in those Fangman stocks. Anyway, that's it for today. We'll keep a close eye on our current positions and post all the updates on Twitter, Discord, Twitch stream, you name it. Join us on those platforms, links in the description below. All right, stay safe, Brew Crew. See you in the next update.